Good morning, everybody, and warm welcome to the Daily Energy Markets podcast. It is Friday, 23rd of May, and crude is trading on around 0.8%. Brent is slightly under $64 a barrel, and WTI slightly under $61. Also down less than 1%. The volatility of oil markets remains high. Prices went slightly up this week on fears over reports about Israel preparing an eventual attack on Iran if nuclear talks between Iran and the US fail. However, oil is set finally for its weekly drop as leaks and reports of a potential further increase to OPEC plus output have dragged them down again. So is this all about fundamentals again dragging the prices down? Is that the approaching OPEC meeting on June 1st and expectations coming out of that? Or maybe US-Iran discussions? The fifth round of dialogue is taking place today in Rome, with Oman acting as mediator. US President Donald Trump spoke to Israeli Prime Minister Benjamin Netanyahu about a potential deal on Thursday. We are going to discuss these questions today, as well as demand for liquids, the energy transition, and natural gas. And I am happy to welcome today Henning Gloristein, Head of Energy, Climate and Resources at Eurasia Group. He's based in London. Daniel Rahmat, Senior Energy Security Consultant based in Iran, who will join us in a few minutes. And David Elward, Pricing Director, Energy Transition at General Index, who is joining us from UK. Good morning.
Good morning. Good morning.
Let me start with you, Henning, with these rising tensions in the Middle East and trade lines. How resilient do you see energy markets right now? And are we moving into a more fragmented energy order?
So basically, we think energy markets are pretty resilient. We've actually seen that over the last 3 years, since roughly 2021, and then especially since 2022. There's been so many crises: the ongoing Ukraine crisis and the fallout in oil and gas markets, the Middle East conflict, sanctions. So markets adjust. And if in oil markets, we've seen likes of Russia becoming the biggest supplier of Iran rather than sending it all to Europe. And there's just these dislocations that go on. And in gas markets, that's the same as well. So Europe now doesn't buy much gas from Russia anymore. There is still some gas, but not very much compared to 2022 levels. They've shifted it to Norway and to US LNG. Now, of course, you mentioned new dependencies. There is now a bit of an uncomfortable feeling in Europe. Just like, well, if we start buying huge volumes of LNG from the United States, do we expose ourselves to the whims of President Donald Trump? That is a real risk, but there will be more US LNG coming to Europe, but there are alternatives as well. There are very strong relations now in the gas sector, in the energy sector, between European countries and the Middle East. So Germany and the UAE have a very close relationship and getting deeper, Qatar and the United Kingdom. So, and there's a lot of gas in markets. We think resilience in energy markets is quite strong, but one can't be complacent. I mean, the conflicts in Ukraine and the Middle East are, as of today, unfortunately, both unresolved. So you mentioned the risk of an Iran attack, and what would happen to oil prices. I mean, I know there's a poll going for that. Is a risky question, and the Ukraine crisis is unresolved, and there could be fallout from that for energy markets. So we can't be complacent. But fortunately, most governments are aware of this now, and new agreements are being sought, new policies are being implemented. And I just got back from Norway. Norway is also going to send even more, probably, gas to Europe over the next coming years, because they will receive more investment from Europe. So cautious optimism, but vigilant we must be.
I see. And as Europe moves away from the Russian energy, is that, and it is rapidly increasing energy imports also from US, you mentioned Africa, Qatar. Are we witnessing the creation of a kind of new geopolitical dependencies, just in different forms?
Yeah, that is a risk that comes with this. When you kick one dependency, you quite often build another one, and soon. So I think that is a risk. Most governments who are import reliant, whether it's in Europe, in Northeast Asia, or in India, are acutely aware of this and want to take this crisis to at least reduce dependencies. But it is a risk. There's no infinite resources in fossil fuels, so you will have to build new dependencies. And the new European dependency on US energy is one of such examples. Might turn out to be no big problem, and because there's alternative supply if things go wrong, but it is definitely a risk. It is a more fragmented market now. You've got an Atlantic basin, you've got an Indo-Pacific basin. But the GCC, so the Gulf region, is in a very good position in this because in oil and gas markets, it can play a swing role, provided that the Middle East stays stable. But it is in a good geopolitical position. We think that overall the GCC, and we've seen this politically over the last weeks and months, is in a strong position at the moment.
Mm-hmm. And do you think Europe can succeed in phasing out Russian gas by 2027?
Largely, but not entirely. There are talks to get some pipeline supply either via Ukraine back or via Turk Stream into the central landlocked parts of Europe. So Slovakia and Hungary want to keep that option open. There is some talk of maintaining some LNG supply. That's less popular and it's probably easy to phase out. I think it is too early to say at this stage that no Russian gas will come to Europe by 2027, but there will be largely independent of it. But the detail is up for grabs and this will be negotiated. The people who say there will be absolutely no Russian gas in European systems by 2027, I think this is wishful thinking or positioning ahead of negotiations. But there are negotiations to be had here. So I think we'll have to wait and see. But I think a little bit of Russian gas will come to Europe.
Sure, yeah. It's hard to phase it out entirely. Dan, hey, good morning, Dan. Welcome.
Good morning. How are you?
I'm good, thank you. And you? So I have this question about Iran, of course, and the US in Iran talks, to you. US and Iran have held several rounds of talks this year over Iran's nuclear program, while US President Donald Trump has revived a campaign of stronger sanctions on Iranian crude exports. Dan, as another round of talks is resuming today, there have been escalating statements about possible attacks on Iran's nuclear facilities if diplomacy collapses. How is this narrative being perceived domestically in Iran?
Well, there are two important facts we need to consider. The first thing is whether the first thing is a question, in fact, whether the Israelis are going to launch an attack on Iranian nuclear facilities on their own without any American support, which I very much doubt whether they have such capacity for launching a big, real, effective air raid on Iranian nuclear facilities. And the second important thing in this regard is what is going to be Iran's reaction, if it's going to be limited to Israel or it's going to be targeting more American Israeli interests in the region, including possible oil targets and energy infrastructure in the region. So there are a lot of uncertainties about both questions or both facts I told you, which I would rather say this has a very low chance to happen. Otherwise, that could be a very big escalation in every kind of actually crisis in the region, and this is going to be not limited to Iran itself. At the same time, I very much believe that the Gulf countries like Saudi Arabia, the UAE, Kuwait, and Qatar, also Oman itself, have very much interest in scaling down or reducing the tensions in the region. So they're going to do their best for at least keeping their own countries away from this conflict, which nobody can guarantee at the moment, unfortunately. So there is big question mark whether Israel has the right or has the permission from the United States to attack Iran alone, or to level up the tensions in the region, while Donald Trump is trying to get the conflict in Ukraine to an end. Is he ready to start a bigger one in the region, which is going to very directly impact the global economy? And then we should consider that there are a lot of other players, including China, India, Russia, who are not going to be very much happy with such a war in the region. So I think that the diplomacy is going to have more chance, but the demand from Washington, D.C. for cutting the Iranian enrichment forever or for a long time is a kind of demand which Iran would not accept, because everybody knows that Iran has already joined NPT and has already agreed with many supervisions from the International Atomic Energy Agency, and Iran is open to increase the level of the presence of the International Atomic Energy Agency experts in nuclear facilities. But we need to remember that was the United States who withdrew the JCPOA, an agreement which had limited Iranian nuclear activities during Obama administration.
I see. But energy markets don't look like being very worried about the possible conflict. Oil prices are down nearly 1%, and they are running for the weekly drop. So it looks like we might have a good output of these talks. I don't know. What do you think? What output do you expect for these talks?
I'm not very optimistic. I'm not going to say a war is going to happen, at least a full-scale war. But I'm not very optimistic about the outcome of these talks, because Donald Trump should decide whether he wants to come back to a deal very similar to JCPOA, what he withdrew during his first round of presidency.
You're breaking.
Or
it's my internet.
Sorry, maybe this is.
No, you were breaking. It's fine. I can. You are back.
Is it good now?
Dan,
no, I can't hear you.
Fine. You're okay. I think.
And I don't know if it's me or you only. Henning, David, can you?
We could hear Dan though, yeah.
Oh, you could hear Dan, so it's my internet maybe breaking. Dan, can you repeat your last?
Sure. Donald Trump should decide whether he's going to go back to a deal similar to JCPOA, what he withdrew 8 years ago, or he wants to continue putting pressure on Iran to.
Maybe I will put my video off because I cannot hear you.
I think for the moment, Daniel, if you continue, because I think everyone else can hear you.
Right. Yes. And he should decide whether he's going to push for a new deal, which does not include any kind of enrichment in Iranian soil, which is a sort of prestigious and identical issue for the Iranian regime. Iranian government and Iranian establishment has pushed for enrichment, for slogans like energy security, the right of the nation, achievements, technology advancement, etc. And if they're going to give up enrichment in Iranian soil on any level, that's going to be a very big ideological failure for Iran. So this is a very big matter of honor for both sides. So we should see. I'm not very optimistic, but I still think that we are very distant from a possible war. Maybe a maximum pressure campaign on Iran would be something that Donald Trump can both satisfy the hardliners, both in Israel and the United States, and at the same time prevent a kind of war with Iran. And I think Iran also does not want any war, any kind of war with Americans, because the escalation is going to be huge in the region. And at the same time, Iran believes that knows how to deal with the sanctions. Am I still on air? Hello?
Yeah.
Yes, Dan,
good.
we can hear
Thank
you.
Looks
Yeah,
like my internet.
and there is another issue with the talks, which is
You are breaking for me.
Iran,
But assuming that, Dan, assuming that assuming a breakthrough in nuclear talks, what would it take for Iran to ramp up oil and gas exports quickly? Because it's all about this balance of oil barrels on the market. So how prepared is the infrastructure and market network to respond? There are reports that Iran has. Yes, tell me.
Iran has plans to increase oil production and exports, but it would take time. I would say Iran has the capacity to add more 500 to 700,000 barrels, but it would take about 1 year to add, because Iran has already invested in some actually fresh and grain oil fields, and there are other drilling projects going on. But there are some problems with the older oil fields.
I don't know what's happening with the internet.
Wherever we can hear Daniel perfectly fine.
Okay, I will continue with the answer. Yeah, and I think Iran needs something about 1 year to increase those barrels, to add those barrels to its output. But these projects are ongoing. So lifting the sanctions is not going to immediately add Iranian barrels to the market. But during something about 1 year, Iran is going to increase 500 to 700,000 barrels per day. But if the sanctions are lifted and Iran can absorb enough investment in its upstream, there are huge number of green and gray brown oil fields which are waiting for investment for increasing the volume of Iranian barrels to the market. So recently we had a conference here for investments in Iranian upstream sector. Iran has actually introduced $250,000 billion of investment in several sectors of its oil industry. And I think this huge money is not going to be absorbed due to the horizon of the oil markets. But if sanctions are lifted, there are several interesting projects with high internal rate of return, which can make Iran a more significant player in the oil market. But it all depends on how the sanctions are going to be lifted. But let me add one single point. Yes, the talks between Iran and the US is something very different with the talks between Iran and the European powers, including Germany, France, and the UK. And they recently threatened Iran to snap back the JCPOA, which is going to automatically take all the UN sanctions on Iran, and that's going to be a totally different thing, because if the UN sanctions come back, even China would not buy Iranian oil. And that's going to be a very, very big shock to the market, I think.
Yeah, for the moment, they are still buying it, and in a good quantity, despite the sanctions. And adding more barrels from Iran would certainly play on the bearish side for the price of the Brent and crude oil. Thank you, Dan. This is very insightful. I would like to ask the three of you. Maybe, there's OPEC meeting coming on June 1st. OPEC Plus has already implemented 2 output increases of 411,000 barrels per day in May and in June. With the third hike, maybe yes or not in July. So first of all, do you think, are they going to add another 400,000 barrels more or maybe less? What do you think, David? David, what do you think, and what do you think that it would actually, how it would play for also other products?
Yeah, I think I will. I'll pass the baton to my esteemed colleagues who are probably better placed than I to talk about precisely what the increase might be. But on that latter point, look, we've seen so far, like we've been in a period where oil prices, energy prices have been in downward trend. Like any additional increase in barrels from the OPEC group, from OPEC Plus, is merely going to exacerbate that trend. Now that has been positive for oil refiners in recent months, though we have seen sort of some change, some signs of change in terms of strong refinery margins. I mean, elsewhere across the spectrum, and look, the one thing, I mean, I tend to keep a very close eye on what's going on in like the non-oil, the kind of energy transition space, and it becomes quite challenging in that area when oil prices come down by as much as they have. Consumers look at the fuels that they're used to filling up on, which seem relatively cheap, and the kind of the energy transition fuels, which typically come with a higher like a so-called green premium, become less attractive. And so like there are kind of wide ramifications. I mean, there's this beyond just the kind of what happens within the oil space. So additional barrels from OPEC is a step towards just exacerbating existing price trends, lower prices, and that becomes challenging in terms of demand appetite for the transition to alternative fuels.
I see. And what's your point of view, Henning, on this question about more barrels from OPEC? Yes, no, the same amount.
I think OPEC will continue to add barrels. I think the background here is that OPEC, and in particular Saudi Arabia, after years of withholding supply, they saw that they had been losing consistent market share, in particular for the United States, in a market that has very limited demand growth. So that they were losing the growth in consumption that was still there to other players, in particular in the United States, but they were not getting the high prices that they were wishing for withholding the supply. So they were getting like $70 per barrel Brent roughly for withholding millions of barrels per day and losing market share. And that was something that they would have to give up at some point. And so now we're seeing that, and they're quite keen to regain market share. They already are. So because the remaining market demand growth is in South Asia and Southeast Asia and parts of Northeast Asia as well, but it's basically concentrated in South Asia and the Middle East itself. And OPEC is gaining that against the United States now. So we think it will continue. You can't unwind the cuts in like, what was it, April, and then end it now. That would be a massive loss of face and prestige, we think, and it would be a very costly exercise. So I think they're in it for the longer run now. They're going to tolerate lower prices for quite some time. One thing I would advise to look out for is we think OPEC, in particular Saudis, are less focused on the spot price of crude oil and much more focused on the shape of the forward curve. So as long as that doesn't totally dip into contango, which would then incentivize oil market to store oil, on tankers and for later sale, then I think they will continue to raise their supply. And at the moment, there is still some backwardation on the front end of the curve. So yeah, it's good to, they're selling the oil for immediate consumption. And as long as that's the case, we think they will continue.
Great, thank you, Henning. I will ask Daniel the same question quickly, but before I would like to ask, can we put the question of the day, please? The survey question, which is about OPEC. What decision will OPEC Plus likely make on oil supply at next week's, actually it's June 1st meeting? Will it rise close to 1 million barrel, rise 411,000 barrels, so another one? Maybe there will be no change, or maybe they will cut by 200,000 barrels per day. Please just answer to this question. Daniel, what do you think?
Yeah, I agree with Henning. I think OPEC is going to continue add barrels to the market, considering huge investments. The members have invested in the upstream sector, and there are a lot of barrels waiting for come to the market. This money should come back to the pockets of the investors. So Iraq, the UAE, and Saudi Arabia now have very remarkable spare capacity to add to the market. Especially Saudi Arabia has played a very significant role to keep the level of productions low, and that has ended up in market share loss everywhere, including in Asia. So they're very eager to take back their market share, and they want to play a more significant role in the Asian markets. And at the same time, there is a big risk of the more cuts of Iranian flows towards China. You know, Americans have, for the third time, sanctioned Chinese small refineries in Shandong. So there is a big possibility of more reduction in Iranian barrels deliveries to China. So Saudi Arabia is thinking of taking that market share in Shandong as well. So I very firmly believe that OPEC will add more barrels to the market, and they will continue to do so. And what they're considering is to keeping their market share instead of now playing with the spot prices in the market.
Yes, exactly. I'm not buying this story about only punishing the producers that do not comply to OPEC quotas, but I think it is also about getting the market share back. David, I would like to turn back to you now. Again, let's talk about distillates benchmarks. How do they adapt to shifting global flows and refining changes? If you could tell us a little bit about these transition fuels.
Yes, I mean, look, it's worth saying that like whether it's jet fuel, diesel, gas oil, like the market is very much dominated by these road fuels, has been for a long time, and so any transition away from them is not going to happen overnight. But we do see in different parts of the world like displacement of some of those fuels in some cases happening faster than others. Renewable diesel as a market, so that's a fuel that's derived from like waste products, feedstocks such as used cooking oil or animal fat, tallow. It is becoming quite a booming market, particularly in the US, where there's various incentives in place to encourage producers to bring more of that supply into the market. And we're seeing now this week with Trump's so-called big beautiful bill that's going through Congress. It includes not just tax cuts for high earners, etc., and various other kind of domestic policies, but also on the kind of the domestic renewable fuels, ags policy as well. There's key incentives that are going to be kind of maintained and extended there, which will provide greater will make it more attractive for producers to continue to invest in not only renewable diesel production, but also then sustainable aviation fuel. And that's, I guess, in terms of the distillate kind of Kero slate is where we'll see incremental shifts away from kind of fossil crude derived products, jet fuel into the SAF space. It's very slow, right? I mean, there's a huge buzz around this in the aviation sector. They have a lot that hinges on it, but demand for SAF is still only around 1%, maybe even less than that of total jet fuel consumption.
Exactly. I wanted to ask you, because you specialize actually in price benchmarking and aviation fuel markets. So we saw the European Union and UK implement 2% SAF blend mandates earlier this year. How is the SAF adoption story evolving out of European or US market, for example, here in the Middle East or in Asia?
I mean, so look, as you say, like the UK and the EU have, from the start of this year, implemented a 2% sustainable aviation fuel blend requirement into the aviation fuel pool, What that means in practice is about 1.3 million tons of SAF will be required. And that will incrementally rise over the course of this decade. There's an opportunity and challenge for producers in the Middle East, like whether it's Kuwaiti exports or jet fuel, or also like Kuwait is the largest kind of single supplier of jet fuel coming into Europe, but also very large quantities of jet fuel coming out of the UAE, out of Saudi Arabia. And we know that producers in those countries are already looking at how do they adapt, there's considerations of how do you maintain market share when there's this incremental addition of SAF and away from fossil jet. The region has the capacity to build into this space. Like, it has the financial resources to be able to do so. The region is competitive in terms of infrastructure and production costs versus Europe, and also has feedstocks. I mean, I just saw earlier this week there's offers of used cooking oil coming out of Saudi Arabia. Now that at the moment is going into Northwest Europe, into some of the production centers in ARA, but there's no reason why in a couple of years' time, perhaps even sooner than that, those flows will just stay in the region and be used to feed into local regional production of SAFs.
I see. But in terms, European and the UK markets and maybe the US, do you see that, this production is going to be scaled quickly? Because
it'll be scaled. The key question there is the speed, is how fast is it quick? Look, I mean, there's various challenges. I mean, actually, the markets and the sector is not doing too bad on the supply side. I mean, I read one report earlier this week that there's already enough SAF supply or enough SAF capacity to meet EU mandates through to 2029. So that's a substantial increase in volumes, and we're seeing that borne out in prices at the moment. Like, margins for SAF renewable diesel producers, they both at this stage come out of the same refineries, same facilities. Margins have really collapsed, and that's because there's more supply than there is demand. I mentioned Trump's Big Beautiful Bill, that and the positive effect that we're likely to see on production investment. It's giving incentives through to 2031, and so that's a good time horizon for which to continue to add capacity. But what's key is demand. Demand at the moment. I've heard that 2025 is being called the year of mandates. Like, yes and no. In some countries, yes. In some regions, the UK, the EU, we certainly seeing the effect and a floor being set in terms of the mandated volumes. But the rest of the world needs to catch up. Now, there are certainly plans in Asia. Many countries across Asia Pacific are looking to sort of follow the EU and the UK and put in place mandates. But if supply comes onto the market in the quantities that's lots of buzz around, then mandates will have to rise, because otherwise it's reliant on voluntary demand. And then voluntary demand takes you into the space of, the greatest, the SAF premium over fossil jet. And so, there's many considerations there, but it's difficult to put a timer and say kind of, is it going to be quick? But there's certainly the factors there to support expansion of this sector at pace. And hey, the sector's got big goals to decarbonize, like many other sectors, right, of net zero by 2050. So if they want to meet that, then they certainly need to accelerate the investment.
Thank you, David. We are running out of time. I have one question to Henning, but first let's take the results of the survey question. So we have rise by 411,000 barrels per day, winning So the expectations are that OPEC will remain on the same track. Thank you. What did you answer, Henning?
The same. I'm fully in
Same,
consensus.
yeah.
It's a bit boring.
Daniel? The same. And David?
Rather clean sweep.
Yeah, everybody's aligned. Well, we will see if they are going to surprise or not. Last question before we wrap up, although we are really running out of time. Staying in this energy transition subject, so really very quickly, Henning, we've seen recent gains by right-wing parties across the European Union. Could this political shift slow down or derail climate goals and energy transition plans in Europe?
We don't think they'll derail them. Also, some of the election results, Romania, Portugal, there was surges of far right, but they didn't win. So we'll have to wait and see. But we think the more conservative governments that are in place now, Germany with Friedrich Merz, the entire European Commission, they are removing a lot of past dogma of the green transition. So they're saying the green transition will continue because it is a matter of national security. We need to reduce import dependence on fossil fuels in general. So it's an industrial and it's a green policy. But there are some really strong buts. So Germany is going to build up to 20 gigawatts of new gas-fired power generation, which is fossil fuels. But it is also green because it's going to replace coal-fired power generation. And so that's the sort of pragmatism you see coming in. And then on the regulatory front, you will see a lot of changes. So the conservative majority of Europe now wants to get rid of quite a lot of the sustainability regulation. So they see that as a win against the surging far right. So if we clamp down on sort of the woke sustainable regulation while keeping largely a more pragmatic but a green transition in place, that they can run this through. And we kind of agree that that is going to work.
Thank you very much. So yes, we're going to wrap up here. I would like to thank you to all of our speakers, Henning Gloystein, Daniel Rahmat, and David Aylward for this great conversation. Thanks a lot to Gulf Intelligence team for hosting me today. And I wish you a very great weekend.
Thank you. Likewise.